Hello and welcome to the Stockout. So much is happening in the world. You might have forgotten that this week is Prime Week, Prime Day on Tuesday and Wednesday, but we're here to remind you this is the Stockout FreightWaves CPG and Retail Podcast. I am one of your hosts, Mike Bowdendistel. I'm joined by my co-host, Grace Sharkey. Grace, are you a Prime Day participant?
Uh, very much so a Prime Day participant. I've actually, it's funny. I've like started kind of a list on the side. I've been trying to hide that data from Amazon itself. I have like a written list. I don't want them to know beforehand what I already want. But no, I'm excited. It's gonna be a crazy week with Amazon Prime. And by the way, too, college football comes back out for the first time in forever too. So there's gonna be a lot of viewers online in some sort of capacity over the next couple of days.
Yeah, I saw the trailer for that, and it was remarkable how similar it is to like a Grand Theft Auto 6 type trailer. They really put a lot of production value in that. So we're going to tell you everything you need to know, or at least a lot of what you maybe don't already know about Amazon Prime Day. I have a hard time calling it Prime Day, it's 2 days. But anyway, we have a graphic on here showing the growth in Prime Day sales, which I think is really interesting if we could get that up. But basically, it started in I don't know if it started in 2015, but it was is to commemorate the company's anniversary. In 2015, just about $1 billion in Prime Day sales, and really took off after about 2018. So it went from got to about 2 billion during those days in 2017. Went to 4 in 2018. Went to about 7 in 2019, and then you had the huge growth in e-commerce during the pandemic, where it went up 45%. And it didn't give back anything. It kept growing, sort of in that 6 to 8% range. Last year, it was up 6.7% to $12.9 billion over the 2 day period. I don't know if it started out as one day and it got a second day got added along the way at some point. But in any event, 12.9 billion last year in sales over the 2 days. And if you sort of look at that relative to what Amazon typically does, Amazon's globally 575 billion in sales. And so it was about 4.1 times higher during that period than a typical day. So you're already taking the largest e-commerce retailer, expanding that quite a bit. So some interesting stats there, and kind of shows. I mean, if you're a carrier that's involved in this space, in the parcel side, you have to sort of be planning for, let's say, a lot more volume than would typically be, and maybe something like, I would estimate that would be kind of in that 5 to 10% growth range again.
Yeah, expected big numbers, and it's interesting too, looking over kind of what was bought a lot last year. CPG brands, in particular, companies, products are exploding on this as well. Not just purchasing electronics. I mean, go check out FreightWaves. We put out a wonderful article on some of the deals. A lot of them are going to be kind of the electronics, goods, things of that nature. But a lot of it, what's at least last year was bought, was more of those CPG products. So I think if people are going to be buying those in bulk, one of the top 5 items is cat food, and we've talked about, of course, the pet industry. I think they're going to pull a lot from probably Chewy over the next couple of days. Well, those
Mhm.
heavy bulk items, right, are going to need some help on that movement as well. So yeah, it's probably an interesting week or two for those providers of that last mile for Amazon, if not Amazon directly, or anyone that they're pushing or out to as well.
Yeah, and moving more into CPG is one way for that behemoth to expand, because you sort of
Mhm.
look at Prime Day last couple of years. You just look at the stats last year, so 12.9 billion out of 375 million items. So it's an average of about $34 an item. And so it sort of implies that CPG was kind of underweighted there. There was a really good webinar last week conducted by a friend of the show, Chris Moe, CEO of Cartograph. And he was, his business Cartograph advises sellers on the Amazon marketplace. When you go to Amazon, 60% of what you buy is from a third party seller. which they call Amazon Marketplace, and this company advises sellers how to do that profitably. And he had all sorts of advice on how to run your business, during Prime Day. Talked about things like making sure that you check your deals every day, make sure it's not being suppressed, not being buried in the results for some reason, and if it is, make some adjustment. Or what's even worse than being buried is having Amazon take down your product completely. And the panel that Chris Moe hosted, they talked about this black cat, what they call a black cat technique, which I had not heard of before. But essentially, what it is if you're competing against another seller on the Amazon Marketplace, you can purchase that company's product and report it as defective or not what you paid for or some other issue with it. And Amazon will sometimes take that product because a customer complained about it until they can conduct an investigation. Now, a competitor might do this just in time for Prime Day, which we just described as being so much more important than a typical day. So it's almost like, if you want to call it, like a mean girl tactic to
Yeah.
to outsmart your competitor. I mean, not terribly ethical, but it seems like that's happening, and they've seen that happen before in some of these items. And Amazon staff is so swamped that you really need to have, if something like that happens, have an escalation strategy. Maybe even have your letters written, know exactly who you're going to go to, know who you're going to go to if your primary contact is not available. So I thought that was interesting. Did you have a chance to listen to that?
Yeah, no, that is interesting, especially because I have, as I'm sure you like, return things to Amazon, and the process seems almost too simple at times, right? There's one time too where I accidentally sent two products in one box and had to reach out. I ended up getting escalated to kind of like an outsourcing group, and within minutes they were already returning it. Now, I wasn't being fraudulent, but just knowing how simple that process is, I'm not surprised that other brands have, or competing sellers, right, have figured this out as well. So it'd be interesting to see if they kind of maybe, like, you would hope that around this time that they keep a close eye on that, but I can't imagine that they're overhiring to avoid that fraudulent situation. So yeah, that I did find that interesting, in particular, that that they had strategized that kind of technique within the selling platform as well.
Yeah, anything to do better on Prime Day, I guess. But some of the other
Yeah,
things that they mentioned was focus on the end of day budgeting, that they observed the highest return on investment of ad spending was towards the evening. So conserve some budget for that until 7 p.m. Of course, Amazon seems to give
smart.
preferential treatment to companies that will spend a lot and buy the advertising. And that was part of the FTC's complaint. So keep that in mind, spend on advertising later in the day. They talked a lot about sort of that hero image, what they call the hero image, which is when you go to Amazon and you see sort of the primary image when you're looking at sort of a number of different items. And they said on some categories they're really strict, like shoes. It has to be one shoe. But in other categories, they're more lenient, and you can do something that's splashy with colors that is more attention grabbing. So I thought that was interesting. And then they talked about how Amazon having Amazon fulfilled by Amazon, sort of FBA is more preferable to having fulfilled by merchant, FBM. I guess if it's fulfilled by merchant, you can't have those that easy returns like you were describing. Like you were describing a transaction that was fulfilled by by Amazon. So the consumers are onto that, and overall you're going to sell less if it's not being fulfilled by Amazon. I think for Prime Day, in order to qualify for that, it does have to be fulfilled by Amazon and in their fulfillment centers and all of those things. And then they also talked about how sort of don't give up after Prime Day, because a lot of people will see the deals on Prime Day, choose not to buy it. Maybe they bought a lot of other things, but you can go back to them and say, still this deal's still on. If you want to come back to us, maybe go directly to our website, et cetera. And I guess one other thing was that they can adjust the Prime Day allocation in real time, which I always suspected when you went to Amazon, it says, hurry up, you have 5 items left, or there's 2 items left at this price, that was all smoke and mirrors, that the seller can adjust that and make it sort of artificial scarcity. But that was really sort of confirmed by listening to those experts. Grace, did I miss anything that sellers should keep in mind?
Well, the one thing I was considering, and you lightly touched on this as well, is like the fulfillment by merchant compared to that by Amazon. I've noticed over the last year, anything that I've purchased that looks like is likely to come from a Chinese company, that there has been some slowness. But keep in mind as well, and I think Eric Coolish from FreightWaves has wrote about this over the last month, right? We just saw the changes in customs too for any goods coming from selected areas, China included in that list as well. So, yeah, if you're not seeing like that Prime Day next delivery, or you maybe are seeing that, but through because they'll show the company that's producing it through a company that's maybe over in China in particular, you're probably going to see some real slowness. So consider that, right? If it's a few dollars more for something that's being fulfilled by Amazon and is located here in the United States, or closest to the US, so you're likely going to have a better delivery experience compared to that in some of those regions as well. And go check out that article from Eric to learn more about that too.
Yeah, so good advice there, and happy Prime Day to people on all sides of it. Carriers, merchants, consumers, everyone sort of on one side or the other. So we might have those record CPG sales in Amazon, and we might not. We'll see. If there's a reason why we won't, gets into this next topic, is that consumers are showing greater resistance to higher prices. So a couple of big CPGs reported last week, one of which was Pepsi, another which was ConAgra. And it does seem like consumers are just getting less willing to accept some of these higher prices. And Pepsi, owns Frito-Lay, of course, the biggest snack company. And Frito-Lay, the Frito-Lay segment reported a 4% drop in sales volume, and their revenue was flat in that segment. So the implication is they took prices up another 4%, and consumers gave it right back to them with a 4% decline in volume. So they're pretty elastic there. And the beverage business tends to be more stable. I mean, people need their caffeine, but still, even the sales volume in the North American beverage business declined 3%. So that could be trading one thing for another. The energy drinks seem to be doing well, but at the same time, also likely a response to some of the higher prices. They did say that consumers are less interested in promotions. Those are things like buy one, get one free, and they actually want lower priced items for lower priced price points on single items. There are exceptions to this. Snack items that seem to be popular are those that are like the healthier items, which I think maybe gets into the fact that consumers are on different tracks, and those healthier items appeal to a higher income consumer. Pepsi says they're rolling out more pricing tiers. And then they also said that they need to sort of have a little bit of a reset in terms of the value proposition to the consumer, and they're going to give the consumer back some value, is kind of what they said. They didn't go as far as to say they're going to cut prices, but they did recognize that there's a mismatch after these years of inflation, and they're going to have to give some value back to consumers. Maybe that's larger pack sizes, or one way or another. So what did you make of those comments?
Yeah, it's interesting, especially the buy one the BOGO aspect of things. I think it aligns even with the healthy aspect of consumers as well. I think people are getting to this point, especially where prices are, saying, I'm not trying to buy more because I'm trying to eat less, or be more considerate of my proportion sizes. So I'm not trying to just buy more to get that savings. I want that actual savings passed down to me in some way. And I think these prices have just stuck for so long, and we've heard, I mean, a number of these brands, we've reported it, right, who've quote unquote tried to bring some of these prices down, but I don't think consumers are seeing it. It's even and something we'll talk about later too, is like even the private labels are, we're not seeing those prices go down even from those products as well. So I think that goes hand in hand. And as a consumer and a shopper, I agree. I mean, I've been doing that myself, kind of watching my proportion sizes recently, and I've noticed it's like if I do want to get that deal, it wants the company wants me to buy more, and that's just not fitting or aligning. And also that keeps more money in my pocket usually at the end of the day because I'm not purchasing these bulk these items. Or if I do want bulk, right, I'm going to go to Costco, I'm going to go to Walmart Plus, and some of these, or Sam's Club, right, and some of these other options where that I think pricing per unit is actually going to be less than maybe that BOGO at your direct grocer. So I've seen it personally as a shopper, and I think that again, it's aligning with the health aspect of consumers these days as well.
Yeah, they have to grow their revenue somehow, and they're already a company like
True.
Pepsi is already
Yeah.
so big at snacking that sort of healthy is one place they can go to grow sales volume. It was also interesting that this quote that the ConAgra CEO had, and he said he expects an eventual, he said gradual waning of consumer industry trends seen throughout the fiscal year as consumers adapt and establish new reference prices. So essentially, they're going to get used to these higher prices and accept the higher prices. ConAgra has been a company that's been under a lot of pressure. Lately, it seems to be one company where consumers have traded out of some of their things like pre-made, meals. But want to move on. Another thing that's happening this week is the transportation carriers are starting to report earnings. JB Hunt kicks things off tomorrow, and if I show one Sonar chart that would sort of summarize, I think, what they're going to say, it's this one on domestic container volume that's loaded. So this is going to be loaded 53-foot containers. That's the market they're in, along with Hub Group, Schneider, Knight Swift on their intermodal segment. And that white line is 2024. And you've seen some nice growth here in the last several weeks, in the last sort of 40 days. Domestic intermodal volume was up 6.7% year over year. So you should expect JB Hunt to talk about how volume trends improved throughout the quarter, finished the second quarter on a good note, and is starting the third quarter on a good note. And we've heard them say in the past, volume growth tends to presage an improvement in pricing, which I'm not sure they've seen an improvement in pricing yet based on the data we've seen, but more likely that's coming later in the year, which is sort of be the start of the next bid cycle. Tends to start sort of fourth quarter into the in the next year. So expect that. And so a little bit of a departure from what we saw earlier in the year, where most of the volume growth and intermodal was all international, whereas domestic was lagging. Sort of the first quarter, international intermodal was up about 20%, and domestic intermodal was up more like 2 or 3%. But there's been more transloading of imported goods from international containers into domestic containers. And that has a big impact on domestic intermodal volume. So it'll be interesting to see if JB Hunt expects that going forward. So that's something that you can check out. I believe their call is tomorrow morning.
Yeah, so it's going to be a busy week from the editorial team. There's a lot of, I think, the next week's episode, we're going to have a lot to go over when it comes to actual what we're seeing from the transportation providers as well.
Yeah, absolutely. Yeah, John Kingston and Todd Maiden always do a great job covering those
Yeah.
ones, and just you don't have time to listen to 100 analyst calls. I mean, no one does, but invest a couple minutes. Let's just go sort of get the gist of them and see what the stock market reaction is, and sometimes that's all you have time for.
Yeah.
But I want to move on to the next topic, which is private brands report record sales. And, you had some thoughts on this. And it's really been a trend that we've been seeing. I mean, I know the fastest growing grocery store chain in the United States has been Aldi, that's sort of the German discounter.
Yeah.
But what can you tell us about
Yeah.
private label brands?
Well, yeah, it's interesting because we have been talking about it, and now we've got some wonderful data actually backed it up as well. And this came from I think Circana report, along with the Private Brands Association. And over this, so this is the first half of 2024, right? We're just about 6 months and 15 days into it at this point. And overall, so far, 22.9%, 23%, let's call it, of market share has actually come from private labels so far throughout grocery store sales. So that's huge. They hit the record sales of $121 billion just in these first 6 months. And we're seeing it in some really interesting categories. Beauty is up to 10%, and private label liquors up 8.8%, food 6.9%, refrigerated is actually down a little bit, 0.7%. Not too much, but down a little. And overall, they came back saying that 46% of grocery shoppers are looking once again at these private labels as a brand to or a way to, I think, to get a little bit cheaper, cost efficient products. This actually comes from this last at the beginning of the year when they did this survey. This is the percentage of consumers that are looking to buy private labels for each of these brands. So paper products, right? I mean, it's pretty high. I'd say over 30%, right, for everything across the board. So I think what's happening, right, is people are going to these stores. They're actually considering the cost difference between maybe their favorite brand and their store brand, and they're making that choice to switch to the private label. I mean, I'll be honest, like for all those out there, it's funny you brought up Aldi as well. It's like a perfect example. Like check out when you go to the grocery store, right? Like just flip over these products, look at the ingredients list, and I'd say 80% of the time they're pretty much the exact same order and the exact, which likely means the exact same amount as what you're seeing on the other labels as well. And if for some reason, one is going to be cents per unit cheaper, then I think that's where we're trying to find that savings as a consumer. So I think we're starting to catch on to those differences, and people are considering a little bit more of these private label brands when they go and shop. I know I have in particular, and right now, importance from these surveys is price over quality and taste. So, I mean, even if I flip that over and I see, for instance, if it's like peanut butter and some type of oil is before the peanut, then that means, okay, it might not be as flavorful as the other brand, but I'm trying to save money where I can, and that decision is going to be made. So again, it's, we're FreightWaves. We love to have some data behind what we're reporting. We've talked about this becoming a bigger and bigger trend in the consumer space, and now we not only have record sales in that particular area, but I think consumers really considering that and being conscious of the difference between these labels when they're going to the store and making their choices.
Yeah, the private label brands on average, I've seen numbers on this, and they're roughly 30-ish% cheaper, maybe high 20s, low 30s. So it is very significant, and
Yeah.
it's easy to see why more people are going in that direction. Have a couple minutes left. I want to talk about something that's neither in the categories of retail or CPG, but I think it's important for as an economic indicator, is
Yeah.
that auto dealer inventories are now at the highest level in 4 years. So this has a pretty big impact. I think this shows that people are not willing as willing to make large ticket purchases. Should also lead to a decline in vehicle prices, which is a good thing for consumers. Now, the financing costs are very high, but also should lead to a decline in insurance costs, because a big part of the run up in insurance, car insurance, which has been absolutely crazy, has been because the price of the vehicles on the road has been higher. Insurance company has to replace the vehicle to the state it was in if there's an accident. But some of the stats on this I thought were interesting. So they have 2.96 million vehicles on U.S. lots, which is a 76-day supply. And then when you look at it by type of value segment, 61-day supply of vehicles in the $20,000 to $30,000 range, which is not that many vehicles in that range anymore. A 97-day supply in the $60,000 to $80,000 range. So you expect the higher value vehicles to have a higher day supply. That's pretty typical, but still overall 76-day supply. The only ones that are a little bit more reasonable are the Japanese nameplates. they have a little bit more of a reasonable inventory level. Toyota and I think it was Mazda, sort of in that 1 month range. So it's not terrible for auto dealers, but auto sales do seem to be slowing down. So it does seem like we're seeing a slowing in consumer activity, both on some of the everyday items, like you were talking about with the private label foods taking over name brands, but also on these big ticket items as well.
Well, Mike, how are they going to buy a car and also spend all this money on Amazon Prime Day? Because you just can't do both. So it's
Yep.
going to be a fun week. I'm excited to. I'm sure if not next week, the week after, we'll have some results from Prime Day to see exactly how those consumers responded, and hopefully see a little action in the CPG side. But other than that, it looks like we're running out of time. For everyone, make sure that you go subscribe to our community and get our weekly newsletter. Head to freightwaves.com, click on newsletters at the top of the page. You see the Stockout right there at the top, and go ahead and join that. And other than that, enjoy your Prime Day shopping, and we'll talk with you all next week about it.